Assalamu alaikum. This is Abdul Rafi Sohan. So today we have accounting MCQs on the topic ratios. So I'll try to solve as many questions as possible with the explanations of the answers as well as why the other options are wrong. So if we start with the first question, it says that which action would increase the company's current ratio? So current ratio, as we all know, the formula for current ratio is current assets divided by current liabilities. And here we have to tell which action will increase this ratio. So definitely from the mathematics perspective, the current assets should be increasing, or on the other hand, contrary, current liabilities should be decreasing, or something simultaneously should be happening. So if we start talking about, let's go through the options here. So if we talk about paying rent in advance, so paying rent in advance is basically that there will be a cash outflow. So your cash will decrease, which means your current assets are going to decrease. So definitely this will not help the current ratio to improve or increase. That's why option A is eliminated. If we talk about option B, that is receiving money from trade receivables. So receiving money means that your asset, that is cash or bank, will increase, but again, that because trade receivables are also an current asset, that is other name is debtors, so debtors are going to fall because debtors are going to reduce. So an asset reduced and an asset increase by the similar amount, same amount, so there will be no effect from this option. Okay, so the option B also get eliminated because there will be no effect, and here current assets are going to fall. Similarly, if we talk about option C, so we have that we are going to repaying a long-term loan. Again, there is cash outflow in option number C, and if we are repaying a long-term loan, definitely means that our assets are going to decrease, which means the bank or cash decreases. So this option is also not possible. So that's one approach of solving MCQs, that you eliminate the options. So that's one approach of solving MCQs, by eliminating the options. So the remaining option is option number D, that is you are selling non-current assets, and that should be the answer, because when you sell non-current assets, you are going to receive capital. This is a capital receipt as well, and you are going to increase your assets because cash or on credit, like after some time, you'll definitely receive the payment for it for selling non-current assets. So definitely your cash increases or bank increases, which means your current ratio will improve. So definitely the answer should be selling non-current assets will help you, because non-current assets are not part of any current assets or current liabilities, and non-current assets do not affect the current ratio. So definitely the best possible option and is option number D. Moving forward, if we talk about the next MCQ, we have here Bradshaw does not keep proper books of accounting. The following information is available for us for the following year. So we have been given the cost of sales, we have been given the markup, cash sales, and trade receivables. So what is the requirement of the question? That's basically a numerical question. So we have to find out total sales and the trade receivables turnover. So if we talk about the total sales, so we have been given the markup and the cost of sales, and we are going to use the markup formula in order to find the sales. So what is the formula for markup? Markup is C1 plus R is equals to S, that 1 plus the rate is equals to, will give us the sales. So we have the cost of sales as 750,000, 1 plus the 20%, and here you go, you got the total sales for the following year. By just using a calculator, just find out what is the amount of sales. That is $900,000 is the amount of total sales. By using the markup formula, we got this. Markup is always on cost, so we applied that on cost and we got the total sales. When we got 900,000, definitely our answer is either option A or B, and option C and D got eliminated. They are both eliminated because the total sales value is not matching with them. So either option A is the answer or option B is the answer. Moving forward, we have to find out what is the trade receivables turnover in days. So the formula for trade receivable turnover in days is that receivables upon credit sales times 365. And what is meant by trade receivables turnover is how much time it takes for our debtors to pay us. So how much, when do we receive payments from our debtors? That's how, that's what we find it from here. So as the number of days are low or smaller, that's better for our company, for the owner as well. So the important thing to understand is that we already have been given the receivables. So it will be 46,000 divided by the credit sales. Okay, so the problem is we don't have credit sales. Either we have the total sales and cash sales. Okay, so what's the method here to find out the credit sales? If you have the total sales, there are only two ways of making sales. Either you sell on cash or you sell on credit, like you receive payment after some time. So if you need to find the credit sales, it will be total sales minus the cash sales. That is going to be 900,000 minus 300,000. So you get 600,000 as the credit sales. Just find out using a calculator what is the numerical value of this. So 46,000 and 600,000 into 365, we are going to get 27.98, and just round off to 28, so it will be 28 days. And definitely our answer should be option number B, that is 900,000 as the sales, and trade receivable turnover as 28 days. I hope students you got these both questions. Let me know if there's any questions or anything you didn't get, you didn't understand anything. I'm available for the help. Let's moving forward. Let's move further. So now we have to find out what was the return on capital employed for this question, and we have been given the financial statements of the company and data related to that. So if we talk about this question, we have been given the profit for the year is $23,000, and current liabilities, non-current liabilities, ordinary shares. So basically the equity section and the reserve section for the balance sheet, okay, with interest paid is also given. So we have to find the return on capital employed. The first important thing to understand is that in the formula for return on capital employed, we don't take profit for the year. That's a mistake that students make. So we have to take the profit before the interest and tax, or simply called the earnings before the EBIT, that is earnings before interest and tax. So you have to basically add back the interest and the tax if you have been given the profit. So similarly, we are going to do that. To find out the profit before interest and tax, we are to find out the PBIT, profit before interest and tax, just add back the profit, just add back the interest in the profit, that is 23,000 plus 11,000, that will be 34,000. So you got the first numerator figure, that is 34,000 in the numerator. What about the capital employed? So the capital employed is, there are different formulas to calculate capital employed, and in here, given these situation, given the facts, that given the information, capital employed will be all the equity, like all the reserves and all the issued share capital, plus the long-term liabilities, that is non-current liabilities. So capital employed will be here 40,000 plus this ordinary shares 120,000 plus the general reserve and the retained earnings, the profit that is stayed retained in the company, that is 46,000. So you add all of them, that is your capital employed for this question. 40 plus 120 plus 10 plus 46, that is 216,000. We have to note that current liabilities are just given for distraction, and you have to ignore it, because current liability is never a part of the capital employed, because it is short term, and we have to, it's a debt to us. If we owe this to our creditors, so we have to pay this. That's why it's not part of capital employed. Okay, so definitely this has to be ignored. Current liabilities have to be ignored. So the final answer, by using a calculator, you can find out, that is 34 divided by 216 into 100. You are going to get 15.74%, and we have an option C here, 15.74%. So that is our final answer, that is 15.74%. I hope you got all these 3 questions, and that's it for today. I'll do more questions as well. Still you have any questions and queries,